Good day, everyone. Well, we see the major averages having a little breather here. NASDAQ's pulling back to the 10-day, same with the S&P. Looks pretty typical, Russell 2000 as well. But yesterday's minor drop was on lower volume, so that's constructive. Also, in the face of negative news, it's always good to see that institutions aren't dogpiling out of the market, meaning that they're taking the negative news in stride and actually probably looking forward in terms of where the market's going to head. And we are in an uptrend. The number of leading stocks that have had actionable buy points over the last few weeks has been the most we've seen, I think, all year. So that bodes well for the internals of this market. Yeah, it is an aging bull market, but who cares? We're in a QE environment, and that QE of not fighting the Feds across all the central banks in the land, on the planet, is a good piece of advice. In other words, as long as the central banks continue to do this, they could artificially prop the markets higher and higher, and this bull market might go for, who knows, maybe it goes for another year or more. Before we finally put in a major top. But trying to predict these major tops is often futile and costs money, because the market's just, since 2009, when things look like they're falling apart, the markets find their floor and start on up again. And MDM, market direction models, had a good signal. I have made a couple adjustments, obviously, along the way since 2009. It did very well 2009 to 2011 because of those adjustments. 2012 and 13 were very sideways and manipulated environments, even more so than before. So the model had to make additional adjustments to account for markets that just don't want to sell off, but sell off just enough to push the model into a sell signal. And I noticed that the trend-following wizards seems like they're having the same problem. They go into cash or go on a sell signal right at the point where the markets find their footing and then start moving higher, which accounts for their unprecedented lag in terms of their performance as an aggregate group. The stellar all-stars of trend-following wizards and Jack Schwager's books are, as a group, they're all taking it on the chin since 2000 and, well, really since QE began, but more pronounced since 2011. 2011 was a horrible year for them. 2012 and 2013, this year, I think as a group they're still down this year. Last year they were down. The year before I think they were down. So this is really unprecedented, and it just speaks to the sign of the times. But every problem contains its own solution. So the MDM, it's had its share of tough times in its more than 20-year history, and this one's a doozy. But right now, where QE stands and probably is going to stay, the model's tweaking probably is going to be absolutely minimal. I would imagine going forward until something, until QE starts to really get to withdrawn. I don't think that's going to happen for at least another year, based on what PIMCO's Gross has said about bonds, which I agree with. That yields are probably going to stay very low with all this manipulation going on for a prolonged period of time, meaning read into that as like at least 1 year. I think he was even calling for possible 2 years out before we actually see QE in all its various forms being really withdrawn from the market. And with that, I'd leave it to Gil. The ego knows no bounds, I see.
Actually, that applause was for you, and
my ego knows no bounds. That's what I meant.
No, I think the market direction model held on that buy signal, which I got to tell you, I thought you were freaking crazy. And of course, as you know, Dr. Guy, I love to diss your model as often as possible. Again, a character flaw, but the model's working well. I thought it was interesting. Yesterday, we got an email from someone who canceled their subscription because the model isn't working. I'm thinking, well, wait a minute, it's working. But they said they would return after a period of time once the model started working. I just want to know how you determine when it's going to start working again, or whether it's working fine now and there's no issue. But, whatever. People have the reasons for throwing the towel in, and a lot of times once that happens, that may be the end of tough times for the MDM, but we'll see. Anyways, what I see going on here, I was talking about this yesterday in the chat room, you have a little bit of rotation here. You notice the S&P 500 coming off more than the NASDAQ. NASDAQ's hanging in there tighter. The NDX is sort of holding up the NASDAQ. You're also getting the smaller cap names are acting a little better on this move here. I thought that this happened last week, late last week, and the IWM representing the Russell 2000 broke out through the 50-day moving averages, headed higher. If you look at this pullback, it looks normal to me in the IWM, and if looking at NASDAQ volume 2 on this pullback, it looks like what happened yesterday. You're just getting support, pulling back a little bit today, but I think what they're doing is they're just shaking people out because there's a rotation. I was talking about this yesterday in the chat room. I see a subtle rotation going on here as you see some of these more risk-on names start to move to the forefront, as you see some of these other names like the airlines, which have been really strong. This is one of the reasons I don't like to get involved with these big slow things, because this is what they do. They trudge higher and then slam. They break them. American Airlines getting hit. Southwest Airlines getting hit. I don't know if there's some news today that's really sending them down, but the thing is you could start to see them falter a few days ago. And let's see, what's another one? DAL. So, people asking about Save. It's more of a small airline, but it's coming in. Would you buy it on the pullback? Not really. I'm more interested in names like Palo Alto Networks. I think SunPower is breaking out here. Been talking about this one on the chat room a lot. And for those of you who like to look at chart patterns, here's a reverse head and shoulders. So breaking out, you could call that an udder cup with handle. So an udder with handle. Looks more like an udder than a cup. And things trying to break out right now. It's actually closing in on its not all-time closing high, but 52-week closing high here. And that looks pretty good. News this morning out of Iraq that, the terrorists are back and they're taking over the whole country. Big deal. Like that's a surprise. I think the naivety, I think, of the U.S. in general and presidents like Bush and others that think we can get engaged in nice warfare and free people and then engage in nation building, I think it's really naive. I mean, here we are, a country, the U.S., a country that's been around for how many years now, Dr. K? Can you do a quick calc for me on that? It's like 238, something like that.
Say that again?
How long has the U.S. been around? 238 years?
1776.
Yeah, so 238 years, right? Did I get that right? Am I right? Or
you got it on those.
Okay. Anyways, we've been around for 238 years. Yeah, we got a reasonably good republic. We do live in a constitutional republic. I just want to remind everyone, even though President Obama, who is allegedly a constitutional scholar, seems to think that we live in a constitutional democracy, which I think he thinks democracy equals dictatorship, but I'm not really sure there. But I think it's amazing that somebody who's supposed to be so smart and a constitutional scholar doesn't even realize we live in a constitutional republic. I had a high school teacher who had a real pet peeve about that one. But anyways, the U.S., it's been relatively successful. I think it's in jeopardy now because government has taken everything over. Ed Sekoda's book, The 39th Day, I think is very interesting in terms of talking about how the government over the years has usurped all the resources, but to fight wars in Iraq that don't produce any end result other than just stir things up again. So they're worried that that's going to turn into a regional conflict because the Kurds are talking about jumping in, the Turks are talking about jumping in, the Iranians are talking about jumping in. And, if you get some big regional conflict, that could affect oil supplies. That's why oil stocks are going bonkers today. One of my favorites, Sanchez Energy, is very volatile. You buy it on pullbacks, moving higher. But Fang is jacking higher, stalling out a little bit. It's already extended. Bonanza Creek Energy is continuing higher. I mean, you could just go down the list. Even this one, which somebody on the chat room likes, they're all going up. So it's not... Throw a dart and you can find an oil stock that's going higher. So, I think we always think that's a boring area. It's actually been pretty exciting, and I think it's got a little juice today, but we'll see how that news pans out. I mean, if it turns out that there isn't that much risk of a regional conflict, then you could just see them all float back in. Social networking stocks seem to be getting some juice here. We got a pocket pivot in Facebook. Keep in mind, though, as it comes up in here, you got a little congestion up here at around the 70 level. Let's see, wait, do I have that? No, I'm sorry. I take that back. Around the 66, 67 level, and I think, where do we get to today? We had a high of 66.47. To me, Facebook's doing what it always does. It'll run up. It'll run up 70 cents and then pull back 80 cents, shake everyone out, and then turn around and go back $1.50. So to me, it's just doing what it's doing. Twitter, though, is the social networking leader today. It's running up to the 50-day moving average. I'm going to guess it goes through the 50-day moving average on a pocket pivot that's similar to Amazon's the other day, coming up through here. We didn't report on this. It's kind of a, the thing is still in a downtrend, so it's not really clear whether it's rounding out. Twitter might have a better chance. Maybe it's rounding out a little better. I don't know, but it's trying. And I'm long the stock. I've been playing it since this low here, but it's choppy. But this morning, the trend is a little better than Facebook's. But Facebook hanging tight right now, down 9 cents. LinkedIn is also turning the corner here, it looks like. A similar position. You got a pocket pivot here 3 days ago on Tuesday, coming up to the 50-day. Now, these are deep doo-doo pocket pivots. I think, though, that you can get rallies maybe up to this area of resistance around 180 if the market continues higher. And some of these stocks coming up off the lows have given you the most juice on the upside. I'm looking at other stocks. Data is trying to turn here. Similar position. Yelp, I think you already had a pocket pivot here, bottom fishing pocket pivot. It's going tight, sideways, bounces off the 50-day, now trying to turn up off the 10-day. I don't know if this thing's going to make it, but you're seeing a lot of this sort of action, and you're seeing money shift back into these stocks as they come out of other names. Let's see. I want to look at this. AV, Aero Environment. That doesn't really thrill me. Kind of blah. Spirit Aerosystems has this cup with hand. You got this big ugly gap here. I'm not sure what that was caused by. Pulling back to the 10-day, maybe it's Bible here. I actually own a tiny bit of this thing on this pullback just to see if it works. I don't know. Looks kind of blah to me. I'd rather be. I like I think the solars look good here with SunPower breaking out. Watch First Solar. It's hanging along the 10-day moving average, and you might get a pocket pivot. You have this sort of gap up pocket pivot here on the news that the Commerce Department was going after the Chinese imports, and so this thing jacked up. But it's kind of a V-shaped position on this pocket pivot, so it's got to back and fill a little bit. I'd keep an eye on it. It might turn out of here. You're looking at it on a weekly. You're not getting a lot of selling on the weekly chart. It comes right back to the top of this prior base. It's basically setting you got a base here, another base here, and another base here. So it's kind of a stair-step base on base on base. And it looks like it might want to try to move higher. I think SunPower will lead the group higher. There's another one I was picking up yesterday on my charts. It showed up as a pocket pivot. Is GTAT, or GT Advanced Technologies. Also got a pocket pivot. That looks okay. I mean, technically, I don't see any problem with it. You want to be buying it yesterday as close to the 10-day moving average as possible, because now you're somewhat extended. But that looks pretty. Other ones in the group, Solar City, not really going anywhere. It's kind of the laggard, so I'd watch it, though. Maybe you'll get some kind of pocket pivot. You got some heavy downside volume here. This probably takes a while. You got a black cross. I don't know. It's just not. All the moving averages are turning down except for the 200-day. Don't really like that. Would prefer to see either flatter or slightly up. SunPower is really the one that's got it going on right now. So. And that GTAT, I think the other one's GTAT rather, whatever. You got Trina Solar getting whacked, JKS getting whacked. These aren't happening, so SunPower is your leader. That's where you want to be. Let's see. What about some? I wanted to point out. I got that applause. Somebody showed me a website that has Kramer's sound effects, so like I like that one. Whenever anybody asks a stupid question, they're going to get that one. So, and anybody who asks about a stock that's way extended, You get the hog, the pig thing. So okay. So I can answer questions pretty quickly that way. Anyways, let's see. Da-da-da-da, let's see. We live in a constitutional republic. Our rulers don't follow the Constitution, says somebody. That is absolutely true, and they stopped doing it a while ago. Tesla finally trending for a pocket pivot off the 50-day. Yes, it is. It's angling for one. I've got an alert on this. It's moving up. Looks fine. We talked about this. My guess was that after a period of backing and filling, it's probably going to try to go higher. I think you're going to see that with a lot of names. And we have been seeing names trying to turn. And Tesla, when you think about it, didn't really correct that much. What was the total correction on that, Dr. K, on Tesla? Do you remember?
Let's see. It was 177.
19%. 19%.
It was about 30. It was about 33%.
Okay. Where did I get the 19?
So for the move it made, that's a very shallow correction, relatively speaking.
Yeah, if you look at it, yeah.
It's forming a constructive
going tight
sideways.
Here.
Yeah, it looks like it could have a pocket pivot as early as today, actually. So I've got my volume set on it in the event that does happen.
Yeah, I've got an alert set on it, too. I was actually going to buy it this morning pre-open. It was trading around 206. But, I don't know. I've got enough things running. I notice if I lose focus and start jumping all over the place, it screws things up. I think I have a nice mix right now of stocks that are working pretty well. Let's see. RH, someone's asking about Restoration Hardware. Well, it's a gap up, so it's a viable gap up, I guess, coming out of this long base. I guess you could buy it using the low of the day, which is 78.75 would be your stop. That's a couple of bucks lower. So, looks okay. Wooba, if you were on the chat room on Monday, I was telling you guys this thing was going code blue right here. Very tight, and the volume drying up because someone asked me about it, and it took off. So you got a pocket pivot, I think, here, I guess yesterday. Yeah, it's a little extended from the 10-day. This is a crazy little stock, though. This Chinese stock flies all over the place. Not really my favorite type of name to buy. It's a little volatile. So, but you saw it get tight. You could have bought it, and you'd be up, maybe 8% on that so far. But it looks okay. Somebody asked about Cree short. I don't really see why you need to short anything. So I don't know. It's just hanging tight. I shorted this thing the other day and it came down a little bit, but you can feel there's a bid underneath there, so it doesn't feel all that weak to me. And you got this sort of what the Japanese would call a frying pan bottom, and so it may try to come out of here. So I'm not. I wouldn't. I think if you're looking for shorts, you're kind of misguided, I'd have to say. And you're going the wrong direction. That's not where the juice is. That's not where you're going to make big money unless you get lucky somewhere. I think the setups are on the long side, and they're all over the place. So if you're not playing them, then I think you're just kind of dumb. So, anyways, but I was trying to short Cree, so I don't know. So how dumb am I? Anyways, Illumina coming down. Well, the stocks run up a long ways. You go right to the peak at the left side, so you're probably going to build a handle. What's it down today, Dr. K? Like 3%, 4%?
Let's see. It's down 4%, just over.
Yeah, so that's, stocks can pull down like that. It's always interesting, stock runs up like that. That's a pretty darn good move from here if you look at it. And then people only get worried about it when it has a day down. I don't know why you don't get worried about it when it's up. But it's interesting the psychology of people when it comes to stocks and how they look at the action. A pullback, is that something to be concerned about? Well, I don't know. Was this run from here to here something to be concerned about? I think people just get carried away with it. So I think it's entitled to build a handle. Handles can be, how deep can a handle be, Dr. K, according to your work? Like 10%? I've seen some handles as deep as 20 and 30.
It really depends on the overall chart formation. So you can't really assign a percentage, because if the pattern's very volatile and the relative strength was 99 plus on the way up, then the handle might be a little more erratic, and it might certainly be more. It might be, again, it might be more off the top than a calmer side. Right. A general rule of thumb, though, would be a constructive handle would be in the top third of the pattern. That's more idealized. And if it's in the bottom third, that could be construed as a bottom fishing pocket pivot, or if it's right about little under mid bar, that could be a constructive pocket pivot. that's not at all bottom fishing. And of course, it's relative to what the general market averages are doing as to where these handles may form.
Right. And the other thing with Illumina is it is an old merchandise type name. So my focus has been, and I admit, I didn't buy this here, and in hindsight, obviously that was not too bright because you could have made a decent profit on the stock, and it was turning before the NASDAQ was. But if you look at this weekly chart, it's a big price run and then a big cup with handle, or a big cup. And I've noticed that a big cup and handle is usually a good first stage base. When you see something like that at the end of a run, it can become a pod. And so to me, it's less reliable. It doesn't mean it can't break out and go higher, but I think they're less reliable than a cup with handle that you see that's a first stage base. So when they start to get big and wide and loose like that, that's often where you get the old punch bowl of death type of topping formation. So, be apprised of something like that. NetEase is trying to pull off a pocket pivot today. It's doing okay. I kind of like, let's see, YY, that's been trying, whoops, well, what am I saying? Timeout, I'm looking at the weekly chart. Yeah, here it is. It is pulling off a pocket pivot sort of breakout, but it's extended from the 10-day on NetEase. YY is another one. That one's coming off. I've traded this one, buying it right in here, and it ran off to the upside a little bit. They're trying to turn, so then you're getting sort of pocket pivots in these. So NetEase, YY, we saw Baidu had it's a bigger, slower name, but it's moving higher. Had another pocket pivot here, right here, 5 days ago, and moving higher. I think that comes on the heels of this. Was there another one in here, Dr. K? I think, no, it just kind of popped out. It was a little bit, well, it's kind of a base breakout and low base breakout here. And it's moving higher, so the group is strong. Let's see. More questions. Take two. Yeah, someone in the chat room was talking about this one 3 days ago when it was up here, and these guys make, I guess, Grand Theft Auto, which my son says is a game for old people. He prefers some of the newer games. I've seen him. I'm trying to remember the names of the games he plays, but they seem to have a historical context, which makes them interesting. So I was interested to hear him recite a bunch of facts from the Revolutionary War, and I'm like, wow, how did you know that? It's like, oh, it's in my video game. So I guess they're doing something better, but I think these guys just make a crime-oriented game like that engages in car stealing. So Grand Theft Auto is basically, I think, appeals to the felon that lurks within all of us. Anyways, I wouldn't buy Take-Two, though. Crappy earnings, crappy stock. I actually shorted it yesterday around 2050, a couple days ago actually, and made a little bit of money there, just for fun. But we joke around a lot on the chat room. So there's a core group there, and we joke around a lot. Some of you newcomers who come in there may get taken aback by some of it, but it's all in good fun. So give me a second here. I think I see something I want to lay into here. You can see they're trying to turn the market now. The Dow's down 39. It's been down almost 70. So they get everybody scared, and then the money's basically rotating out of some of these bigger names and into some of these smaller, more risk-on names. That's what it looks like to me. Anyways, I'm seeing here on MarketSmith that sales of Tesla has fallen from 101% to 10%. Anyone knows why? Well, their sales growth is decelerating, so that's basically the deal. But there are estimates going out 2-3 years where they're looking at a point where they can make 500,000 cars a year, and if they come out with a lower price model, they probably pick up more of the electric car market. So I think it's really a forward-looking thing. But we've talked about this many times, and we wrote an article called "The Death of Can Slim," and it's also something that I perceived when I was at O'Neill and we were advising. Well, in our heyday, which is the early 2000s, we had over 670 institutional clients, and you get to know how these people think, and it's somewhat insightful, I think. and so what I notice is that a lot of these funds, everybody sees everything in hindsight. Everybody knows what earnings are. Like we talked about in that article we wrote for Trader Planet, back when I used to get the daily graphs books, the blue and the green one, and those are just daily graphs, with 4 quarters worth of data. I had an information advantage over most of the brokers in the office, and everybody used to come and bug me to look at my charts, and I wouldn't let them. Because if they're too cheap to buy them for themselves, then they don't deserve to look at mine. I don't know if I'm not being tightwad, but that's how I felt about it. But it gave me an information advantage, and now everybody knows, the earnings last 5 quarters were up 30% or 20%. Big deal. Everybody knows that. And I think a lot of situations now are much more forward-looking. And so Tesla, the stock could turn and go higher on the basis of the forward earnings estimates. So I wouldn't, worry too much about what you're seeing on as far as the past data. If you look at the estimates going out to 2018, you can look at Zacks or you can look at First Call. I think Reuters Reuters owns First Call now, I think. But in 2018, they're estimated to make $8.95 a share, and that would be 23.2 times. It's selling right now 23.2 times those estimates. So on that's kind of far out there. But if you look at, say, the next couple of quarters, you're going to see earnings dip. We saw 0% in the most recent quarter, but then you're going to see them dip to minus 70% in the next quarter. But then immediately they turn around and go up 175, 106, 392, 967, 200, 99, 125, 109, 79. Now, that's the pattern the analysts see going a couple of years out. Now, the trick here is that analysts will often be surprised. And so, those estimates give you some idea of the forward-looking aspects of the story. And I think that you don't want to really get too worried about, sales growth was 10% after 100%. Yeah, they're going through a little, there's the old, Dr. K, you remember the old S-curve, right, of growth.
Absolutely.
Where the beginning part of the S starts on an acceleration, and then the middle part of the S will flatten out. And then I think Tesla's kind of like in the middle part of the S here, and they might be starting up another move to the upside as they build out this gigafactory where they can increase battery capacity, they can increase the number of cars they sell to about 500,000. I think those are the numbers I've seen. Anyways, so somebody's saying...
The real part of the S-curve is the vertical part, and it hasn't gone vertical yet.
No, it hasn't.
Vertical is very fast and ferocious, and then of course it'll level out eventually. But we've seen this with the internet. We've seen this so many peer-to-peer file sharing. They all experience their slower growth and then they go vertical, and that's a great time to be on board stocks or any technologies.
Yeah. So I think Tesla. Pull up the chart here. It looks fine. It looks to me like it's en route to a pocket pivot. I got an alert on it. I don't know. Probably should have just bought it right at the 50-day yesterday. It sort of looked like, and I wrote it down on my list this morning of stocks to be looking at. So, anyways, let's see more questions. If Twitter can close over the 50-day and PP volume trend continues, would this be considered another BFPP or a regular PP? Doesn't matter. Well, I would say it's going to do it. I think it's going to do it. I think it's going through the 50-day and it's going to pocket pivot out of there. The volume it needs to exceed is 40,603,000, and I've got. Do I have an alert on that? No, I don't actually. Should put that up there. Okay, and does it matter? Well, the thing you have to consider is that the deeper in the base that the pocket pivot is when it happens, the more overhead you have, potential overhead you have in the pattern from the left side. So these things sometimes they can jack to the upside. I think Twitter, when it gets going, it has a lot of juice. So it could rally up to 40 in a hurry, and then you see what happens there, or it could turn and make a big pod. Maybe it. That's not unusual for stocks that are real hot, so that's a possibility, definitely. And I think the bottom line is if you're unsure, you see it, you buy it. But if you're on the chat, and you're probably buying it with me a 3 days ago, I think in here. But you see the pocket pivot and you set your alert. So in something like a Yelp, you set your alert actually at a moving average or somewhere where you're going to bail out. And I would remind everyone. And I want to just kind of review this basic concept about stops. Everybody asks about, well, where would you put a stop? Where would you put a stop? And the question to me implies that there's some magic stop that if your stock hits it, it's not going back up. Okay, and that doesn't exist. I think the bottom line with any stop, if you're going to take a shot on the basis of price volume action that you think indicates a buy point for a stock, let's say if you want to take a shot on this one, I think the first thing to do is to decide how much you're willing to lose on that trade. So in other words, I know some people abide by a rule if they don't want a position to ever cause more than a 1% total loss to their overall portfolio. So if they got a $100,000 portfolio and they take a position in XYZ, then they don't want that thing to create a loss that's more than $1,000. So then you can tailor your stop based on where the moving averages are, 10-day, 20-day, 50-day, whatever, or an intraday price low or something like that. Tailor that to what you're willing to lose. And I think that's really the essence of stops when it comes right down to it. How much are you willing to lose on the trade, and how does that stack up relative to what you think you might be able to make on the trade if it succeeds? So in other words, the old risk-reward proposition, rather than magic moving averages, magic price levels, where if the stock sells below that price, it's never going back up. Now, you can get shaken out of stocks, and that happens to me a lot, actually. A lot of times I'll buy a stock several times before I finally latch onto a big position, and boom, it takes off. And I'm perfectly willing to do that. So it also helps to have a margin account, but harder to do in an IRA account. In any case, let's see. The Twitter pocket pivot, if it has one today and you're waiting for that, I think you're buying late personally, but I guess you could act on it, but it would probably need to hold a 50-day on a pullback, or you can set another stop. Is AMD a new name? No, not even close. Advanced Micro, $4 stock. This is such an old semiconductor. It's just moving along with the rest of the group, and it's junk. So I remember somebody at $6 or something, somebody emailed me 2 years ago or something that, EMD is a hot new situation that you should be looking at. And it's like $6. Where's it at now? It's like, what, 4, 5? Yeah,
And
sure.
a gap down.
If it's said, what I always love it when somebody tells you that, oh, this story, this is a big story, and yeah, you can check their earnings estimates, whatever, and they're going to be big. I'll give you an example. This Take-Two, and I apologize, Tim A., for ragging on you on this one again, but maybe it goes higher. If the market goes higher, it wouldn't surprise me. Most stocks will go higher with the market. But what I noticed is looking at this stock, I checked the earnings estimates on it, and in 2014, the big stories are going to make $4.26. So it's selling at roughly 5 times forward estimates, maybe a little less, 4.5, whatever. Like it matters. But what I want to know is if that's the case, why isn't this stock at $100? Why is it at 20? Something's not right. And don't tell me you're the only person who knows that they're making 426 according to analyst estimates in 2014. Something isn't right. So I don't play. And I can remember a stock, it was Mac Store, I believe. They made hard drives back in 95, might have been 96, I'm trying to remember. But the stock was trading relatively cheap at the time. I wonder if it's still around. It was MXTR. No, not around anymore. That was a symbol. But I remember they were trading like at $8, $9, $10 or something like that, and they were going to make $3.66. I thought, wow, if this thing trades at 10 times earnings, it's going to 30 easy. It's a triple from here. Stock went down. So, the naivete that I demonstrated at that point in my career is that I thought somehow I was the only one who knew that. And all these institutions know that, and so they're a little more forward-looking. And you can sort of see that if a stock's acting well, there's probably some sort of forward-looking reason that it is. And if there is some big forward-looking news that's hot or makes the stock look ridiculously cheap like this thing does, then something's not right, because that's known information. That's not a secret, and you're not the only one who knows it. So I think there's a little lesson in there to be learned in terms of the institutions see what's happening. They're privy to that, and they're trying to get an advantage over each other, not by acting on information that everybody already knows about, but by trying to ferret out more forward-looking information and assess situations in a more prescient way rather than looking backwards. So, anyways, Dr. K.
Hi.
Since a stock can have a 50-day pocket pivot, why can't we also consider a 10-week MA pocket pivot just as valid, since a 50-day and 10-week are interchangeable in other trading situations?
Yeah, absolutely. You can use weekly charts for, I mean, for longer term time frames, and they do apply because the market's fractal. I would say I prefer to use the daily charts for pocket pivots because it allows me to pinpoint the buy point more closely, whereas a weekly doesn't give you that additional resolution that I do prefer. But you know, if you prefer weeklies, there's nothing wrong with using a weekly. Just also expect that you might get the pocket pivot a few % late. So do factor that into account.
Is that? Oh, you're not asking about MA. I see a capital MA. ANIK. ANIK? Question mark? I don't know. POS. You know what that means. I don't know. This thing trying to break out. It's not going anywhere. It is extended. It's trying to go higher, but it really can't. It doesn't have any juice there. So I'm not so sure. I get excited about one. The one I like, I think this stock probably will move higher. I like this pattern a little more. And the stock acts a little better for a little cheapy. So the ANIC, though, some higher price stock at 48 bucks and just hanging along the 10 days. So it's not really going anywhere. What will happen here is it'll do nothing. And you got to remember, you have this huge volume reversal here on the Bible gap up that then came in, but that was also at the time that the market started to correct as well. And if you look at this on a relative basis, while the market was correcting, it just tried to build a base, which is constructive. But you have to remember that you have this big reversal day, and that was a huge spread. What was that, Dr. Look, 43.50 up to 52.49. That's a big spread.
Yeah.
And the thing reverses, so you got some overhead up here, you know. So when it tries to come up in here, they're hitting it, ping, 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 and it's just sitting around here. So what will happen is when you sell it, and you get totally bored with the thing, and you sell it, it's going to take off. So just rest assured, you know. It's kind of like this one, Internexion, or what is it? Interzion, I don't know, Interexion Holdings. Anyways, Dutch company. Sitting here doing nothing, got a pocket pivots in here, but finally it got real tight. And for those of you who use my secret weapon chart on HCS Investor Software, it went to a code blue right in here across the board. You had a little pocket pivot on Monday, and then bingo, you break out. So this is the same, you know, situation where it's pocket pivoting, but it's not making it out, and it comes right back in. And if you own it or you buy the pocket pivot and you're going nowhere with it, you'll get bored. And you'll sell it, you know, right here on this day just before it launches. So sometimes they take some time. But, you know, this one, to me, it's got some overhead from the left side of the chart. So this makes sense that it would hang out here for a little while on the weekly. You see that? So there is a context for the way things will act. So you see Internexion took a long time to go sideways before breaking out here because you've got some overhead on the left side of the chart. And then you could look at ANIK, you got some overhead here, obviously, because of this, because of all the idiots who jumped in on the thing around 50 bucks, allowing themselves to be sucked in by their greed. I really like this board here. This is cool. So I like this one the best. That's my favorite one. I actually use this now to communicate with my teenage children. So, you know, I tell them stuff like, all right, if you stay out past your curfew, you're going to be in the House of Pain. Okay, stuff like that. Or my daughter tells me she broke up with that loser boyfriend that she has. And stuff like that. So it works out pretty well, so it's very entertaining.
Just like the radio DJs do it.
Pretty much, yeah. So if Kramer can do it, I can do it too. Let's see. Musk announcement at 10 a.m. about patent sharing. That might be what's pushing Tesla. Hey, maybe it's ready to go. You know, take off out of here, or maybe not. Maybe it needs more time. I got an alert on the volume. If it flashes, we'll send out a report, right, Dr. K?
Yeah, absolutely.
Let's see. Patent announcement on Friday, according to Elon tweet for Tesla. Still think Tesla's the next GM? Well, I think it already is like a GM. So we started talking about it down in here as being like GM in terms of the context of its what it's doing in the car industry in terms of pushing the technology envelope with the electric cars and coming up with solutions that make the electric guitar is what I want to say. Electric car, you know where my head's at. Make the electric car more of a widely used product, because electric cars right now are not very powerful, popular rather. They're not powerful either, and most people aren't really into them. I saw we have friends just got a Leaf. I would never want to be in that thing, man. Somebody run you down in the LA freeway. So I think, you know, with the Tesla being performance oriented, I think if Tesla comes out with a smaller, more affordable car that addresses the mass market, I think they got something. And so, yeah, I think it is. But, you know, again, these precedents, they're not 100% guaranteed to be exactly the same. There are certain concepts that can tell you or lead you in the right direction, where you can figure out that a stock is likely to have a big move based on what it's doing within its industry and the new products. And it might be similar to another company in the same industry, maybe sometimes in a slightly different industry. I remember Bill O'Neill was comparing Apple in 2004. Do you remember, maybe, I guess you don't remember, that there was a company, and I'm trying to remember the name of it, the company that invented the ATM. And he sort of like connected the ATM to what the Apple's doing with the iPod. I was sitting there wondering, you know, I'm not sure about that one, but, you know, he was trying to make some connections, and it did pan out to some extent. But it just gives you an idea of what's possible and whether you're seeing the same pattern of innovation in one company in a particular industry, or the way that they're approaching their own industry that's similar to something that happened in the past. So it's really what they are. But do I still think it's the next GM of 1914? I think it already is, in terms of the price move that it had from around $65 when we first put it on as a buy on the buyable gap up, all the way to $268. That's a how many times is that, Dr. K?
Sorry, 260. I was just looking at
55 to 260. What is that? That's
DocuTel was.
Go ahead.
This is DocuTel was the company. It's interesting. The ATM was patented in 1968 by a baggage handler. Of all people.
Interesting.
But he got the patent, and then Chemical Bank was the first bank a year later to install the first ATM in the U.S.
Huh. Yeah,
so there you go.
I think that was it. CRM, someone's asking about. I don't know. I was looking at this as a possible short if I was going to go after. I mean, I have things on my short sale list in case the market fails for some reason and we start to roll over. And that can happen any day. You know, you can be, even on a day like today, you can have your Twitter up $2, your SunPower up $2, your Palo Alto Networks up $2, everything else moving, your oil stocks moving, and all of a sudden the market tops. That can happen at any time. So that's why I always trade paranoid. But I have a few short sale situations in my back pocket. This one looks like a head and shoulders on the weekly. You have this breakdown, and now it's rallying up into the 50-day. If the market started to roll over, I might just hit this on the short side. But I have hit it, and it doesn't really go anywhere the last few days. Even when the market was going down yesterday, I thought this thing might pull off a buck, and I'd be able to get some Skrilla off of it, as we say in the chat room, and it didn't happen. So Kate, actually Kate was a stock that I was just laying into at about 36.80. I think stock, see how it comes down. It's just building a cup with handle. Comes down into the 20-day, so it looks like it wants to come out, but it's a little bit slow. You know, wedging a little bit in here on the lows. So in this pullback, yes, last week rather, it looks okay, but it may still need some more time. And maybe this pullback, if you're looking at this sort of wedgy action, see how it wedges along the lows. You get a little bit of a pullback in here, but it may need to correct that. So this pullback may be where you buy it. Again, I like to buy things on weakness. I like to buy stocks that look like they're setting up when they're quiet, or I like to buy previously strong stocks when they pull back in constructive way. So, you know, looking at, say, for example, the Palo Alto Networks, you know, I go into a big core position here, runs up here, sell it in here, hold on to a smaller position, not a big, I'm saying a huge position in here where I can go maybe 100, 150% long the stock. You get a nice move in it, back down to a core position. Notice how it's setting up. You've seen the ants here. These little black triangles tells you it's up 12 out of 15 days or better. 12 out of 15 days in a row or better. And so that's a sign of strength. But you got some resistance, see, from the left side of the chart, but not a lot. And it holds in real tight as volume dries up, and bingo, there it goes. So that's how I might handle a stock like this rather than trying to buy the breakout today. This is where everybody in IBD will come in tomorrow and they'll push it up to 85 for us, so because it'll be in the paper tonight. Anyways, so Kate, same thing. If it's pulling back, this is how I'm going to buy it. I'm not going to try and buy it up. I don't really see a problem with this. It's a smaller stock, trades 275,000 shares a day, I believe. Is that right? No, wait. Hold on a second here. I don't know. I'm thinking about selling all my Kate and just buying Tesla. What's that?
Kate is about 1.5 million.
Average volume? Okay, yeah. This is actually showing the volume today. So it's a reasonable trader, but it's not a million shares, a million and a half. That's kind of average, I think. And you come up to the top of the peak of the handle, you're probably wedging a little bit here, and so you need to pull in. It's too premature, I think, to break out. So, but it looks okay. I don't think it looks bad. It's just that the hot stuff right now is not the retail sector, especially with Lulu, I think, getting plastered today. Yeah, down to $7. Ouch. That's what that thing looks like. That's a beautiful head and shoulders. See that? There's the left shoulder complex. The head takes a while to break down, and now it's just going to pieces. Pretty ugly, actually. Okay, let's see. XRS, question mark. Well, I don't know. I don't like this one. Isn't this that TAL Education Group, the Chinese stock? Look at this. I mean, screwy action here. I don't like that. I don't play. Homie, don't play that way. Is that right? Is that how that goes? Is that the Damon Wayans or whatever? Tesla halfway to pocket pivot volume must be releasing patent news at 1 p.m. EST today. So if it turns out to be nothing, then the stock's going to come in, I guess. Gil, can you ask HCSI to put ants in their program? Why don't you ask them? Everything they've done has not been because I've asked them. They put it in. So I mean, Ian and Ron, everybody, they like our work, and I've gotten to know them, and I have a lot of respect for Ian and Ron. They're, I think, decent traders. Ian is kind of like a Bill O'Neill in his own right, and so they put the things in there themselves. I haven't told them to do anything. So I think if you're into it, you should call them and tell them, or email them and tell them to put in ants. Were you able to pyramid into Tesla, or did the trendless market make you jump in and out? I traded it. I traded heavy and then sell and then come back in, traded heavy. So I don't pyramid it really. Diebold. I think Diebold was the name that you're talking about, Dr. K. I don't think it was the other one. NCR. I think it was Diebold. That was the one, actually. Now that you've jogged my aging memory here. SLXP. I don't know. Trying to come out. No buy points. ANET. How could IPO base set up? Well, I think since you seem to be asking me about the future, JT, I think it's going to go to 100, and then it'll form a 3-week high tide flag, and then from there go to 200. Otherwise known as HTF. Do I know? I don't know. It's going to go sideways at some point, or maybe it's like JD.com, which here's your 10-day moving average. Doesn't even wait for the 10-day moving average. Forms a little flag. This is where you have to be using a 5-day moving average on a stock like this, because it just takes off. So who knows? I like this ANET story. I think it's a sound story. I think it's definitely a name people should be looking at. Synaptics announced that they're buying, I think, a company from Apple. Is that right, Dutch K? Do you know? I forget. Something like that.
No, I know they did a gap up, but I didn't look at the news on it.
And
this also wasn't particularly actionable.
And haven't they been a supplier to Apple? That's right. So I don't know. It's way up there. If you can buy it as close to the low at 77.03, now you're at 84. You're way extended. So Buying a Japanese company. Is that what Synaptics is doing? Okay. Well, I don't know. It's news-oriented. I don't know. I couldn't tell you. Let's see. Any other questions? We're getting to the end of the questions here. I'm just looking around. You can see Green Mountain.
Was the,
What's that? Diebold was the one.
I was just saying that IBM was alongside them, but the originator, well, the patent was came out of DocuTel.
I got it. Okay.
So
DocuTel,
I've seen really old company way back when.
Yeah, well, in the 60s, and they're in those really, really old model books.
Yeah.
That I made copies of. They're way back when. So. Not
they're good to have around for.
I mean, for historical, knowledge. But you know what? In terms of like using them as, roadmaps for handling stocks that you're dealing with today, I don't think they're useful at all. So.
Yeah,
because
when the market changes like it has, then really a lot of these rules go out the window.
Yeah.
But if we have a market that, market history does repeat. Well, it rhymes. It doesn't repeat, and so at some point things, maybe it takes 15 years, 20 years off. We get the start of a brand new bull market, and all those model books start to go back into form.
But I think even still, I don't think that they provide you with roadmaps. Like people say, you think Tesla is GM. Like the patterns aren't necessarily going to play out the same way.
Right. They're good for like all charts. They're good for developing a chart eye in context with what's going on. So when you study these things, it's good to look at the major averages and what they were doing relative to the stocks. And it's just you could learn from develop your chart eye from I guess almost any decade really. Yeah. But it's important, not to get too caught up with, well, does this pattern look like this pattern from 1937? Who really cares? You can always find a pattern that kind of looks like the one at present, and that can get you tangled up.
Right. Somebody asked a question, is it possible to mention stocks that are more favorable for IRA accounts? I realize some may be better suited to day trading. There's no real difference. If a stock can have a nice uptrend, and if you're running an IRA account, the way I run my IRA accounts, the positions are smaller and I sit, longer. But I'm owning the same stock. So I've owned in my IRAs Palo Alto Networks since the Bible gap up, and I've traded it heavily in my main trading account that uses heavy margin. So they're all the same. There isn't like certain stocks that are more suitable for IRAs because somehow they go up slowly and more steadily than something else. It's just that if something shows a little bit or even a lot of volatility within its uptrend, it can become tradable as it zigzags back and forth. So Sanchez Energy was buy here. You could have just sat with it and you'd be at new highs. I like to trade this thing because I get a sense of how it moves. But why, if you bought this here in an IRA, what would make it less suitable than buying it, or more suitable than buying it in a trading account, or vice versa, whatever? There's no difference. So, I think that sort of reflects an idea that there are some stocks that are safe and they act less volatile than others, and that's not true because stocks can sit around looking great for a period of time and very non-volatile, and then all of a sudden one day they decide to get volatile. So that's a myth. There is no difference between stocks. They're either uptrending or they aren't. If they are uptrending until they aren't anymore, and there's no less or more suitability for one sort of account or another. You can implement a buy and hold strategy with a volatile stock just as easily as you can implement a trading around a core position strategy in a volatile stock, right, Dr. K? It's all about
absolutely.
Yeah, it's all about position sizing. If you're trying to trade something like a Palo Alto Networks that is volatile in an IRA, then you would be taking a smaller position. So I may actually do 10 to 20% positions in my IRAs, whereas I go 100, 150, sometimes really nutso, and throw it all in for one day and hope I get a nice move like we saw with Facebook the other day when it was up $2.76. And I would point out also, you see Facebook kind of flopping around. That's a pretty good move for Facebook, and it's entitled to a little bit of backing and filling in here. So for all you know, by the close it takes off again. But it's kind of acting the way it does. I think the one that could get some juice going is the Twitter, based on the fact that a lot of people are still short it. You sort of had climactic selling here, I think. This volume on this day was 134 million. And how many shares came loose on that lockup? I don't know. It's 250 million. Anyways, PCRX coming into the 10-day. Yeah, it's along the 10-day. It's had a nice move though, so it may need to go sideways for a bit more. I'm not really interested in this one right now. Should have bought it down in here when it was going code blue. Right. I think right here it went code blue on my chart, and then it took off the next day. For those of you who have HCS Investor software, you can check that out. Let's see. Somebody says, regarding IRA account, I bought POL 18. Love the slows. But I don't see what you're talking about, because you can see these jerks to the downside. Whack, 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 gaps down here. So this is like slow, steady to the upside. That's a relative term. On the weekly chart, it looks decent, but on a daily basis, you're getting some pretty nice swings here, 10% or more. So it is actually a volatile stock. So you basically just bought the trend correctly and have stayed with it. So it has nothing to do with the fact that it's slow and steady. It has some periods where it gets into some ugly-looking action. I'm not sure what's going on here. It must have been added to some index or something. But, you know, this chops around too. So there, and you could play this stock heavily and be trading around some of these movements if you wanted to. So again, there's no difference between one or the other. And get off this idea that there's some stocks that are less risky and more suitable for IRAs versus a more active trading account. I think it's just a matter of position sizing and risk management. Anyways, it's 9 o'clock straight up, so we've gone for an hour. I'm pretty much done. I'll answer a couple more questions. SKX, you know, well, it's run up a long ways. It's pulling back. There's no buy points, you know. I don't think we're using the 10-day moving average here, Dr. Khan, SKX as your selling guide.
If you want to, I think that you know, this market environment, you can be more forgiving and utilize 50-day. I mean, it hasn't done. Let's see, 1, 2, 3, 4, 5, 6. This is the 7th week. If it doesn't violate the 10-day for 7 weeks, then you can switch to the then you use the 10-day as your selling guide. But this is still within, just barely within the 10-week, the 7-week period. So you could say use the switch to using the 50-day as your selling guide.
Yeah, which puts you.
And keep in mind, it's also a retail stock, and retailers often will violate the 10-day more routinely.
Right.
So yeah. Money management, you know, maybe you want to take a little profit off here or just trade around the core position using the 50-day.
Somebody says, Dr. K, wasn't the point of Can Slim as described in Wan's books not to gain an advantage of information over others, but rather a way for Wan to think like institutions in the 1960s and locate stocks that institutions would likely accumulate? The weakness of Can Slim today is that it doesn't address the mentality of today's institutions, including hedge funds, who are willing to accumulate shares of internet companies with speculative earnings. Well, they were doing that in 1999. And the reality is that what O'Neill created back in the 60s when he first started figuring out how to create a chart on a plotter printer automatically, he was giving the institutions an advantage because he didn't have a lot of clients in, and people that he was selling those big red database chart books to, O'Neill database chart books to, he was demonstrating to them how it gave them an advantage. So there was the point of his whole business in creating charts with the data on them that he was to give people an information advantage. I think the comment here is basically the mouths of babes, people who really don't know what they're talking about. Can Slim was then a codification of the characteristics that he observed in leading stocks. But I can tell you most definitely, and Bill told me this is a big selling point when they first came out with those charts. They could go in and people could actually see a chart and it would be updated and it's all shown with all the fundamental data and everybody loved it. But back then, fundamental data was not as widely available. The analyst community, the research capability of a lot of institutional investors is not what it is like today. And so it was about gaining an information advantage. And my point today is that that information advantage has dissipated. And institutions know this because they are forced to gain an advantage by understanding things more forward-looking. if you're saying that the difference today is that hedge funds are willing to accumulate shares of internet companies with speculative earnings, like which ones? Tesla has earnings, Facebook has earnings, LinkedIn has had earnings. There's a whole number of stocks. There's always going to be the stocks that have no earnings, and those are evident in every market environment. So I don't really agree with that point at all. I think it's extremely flawed. I do think, based on my experience, my actual experience with institutions, rather than simply speculating what they might be thinking, and also based on having experience with dealing with over 670 institutions in our heyday at O'Neill back in, I would say 2000, 2001 was the firm's heyday. I started to realize how they're looking at things and the information that they wanted. They're more interested in earnings estimates. They wanted to see earnings estimates graphed on a chart and seeing earnings lines going out into the future. Anyways, so I don't think CanSlim is a weak system. I think it basically still works, but I think you have to look in terms of current earnings, annual earnings, new products, and I would throw in it should be Kane Slim and throw in estimates. What are the forward-looking aspects of the business and the earnings and sales structure. So that's really what I think. Anyways, I'm babbling. Last question before we call it off today. Away has multiple oversold gray bars on HGSI. Seems to be bottoming and rounding out. Would you consider it to be a Twitter-like bottom fish candidate? And I think it's a piece of crap, actually. How's that? No, it's not. It hasn't turned off the lows. There's no pocket pivot. Most of the moving averages are turning down. Not at all. It would need to set up more. I mean, not that it couldn't. Okay, so I don't want to tell you that this can't. It's like Solar City. If it's going to make a turn, whoops. So I got another key in there. If it's going to make a turn, you need to see something telling you it's making a turn. With Twitter, you had this big bottom fishing pocket pivot here, and it's kind of acting tight. So it's still pushing up against the 50-day, which is 37.35. Probably gets closer to there. We'll see what happens. Meanwhile, LinkedIn is moving higher, and Facebook just hanging out. But it looks okay to me. It's probably going to sit here for a couple, 3 days, maybe for another 3 weeks. I don't know. But that's fine. In the meantime, there are plenty of other stocks showing some juicy action. And that's really all I have. So on that note, we will end our presentation for today. Thank you for showing up as always, and we'll catch you guys next week. Dr. K, cue this so long, everyone.
Yeah, all good, all good. Take care, everyone.
All right, take care, everyone. Catch you later.